So what is inflation? Inflation is a general rise in price levels relative to available goods, resulting in a substantial and continuing drop in purchasing power in an economy over a period of time. So you might have noticed that with time things tend to become more expensive. 10 years ago, if you went out to buy a slice of pizza, it didn't cost as much as it costs now, maybe cost $1, it costs more. Everything becomes more expensive with time. And that's because of inflation. Things become more expensive with time. Now, how do we see what was the inflation in the previous years? There's the CPI, which is the Consumer Price Index. But an index basically is just the formula that keeps track of things. There's indexes for stocks, indexes for housing. And the Consumer Price Index is basically an index that tracks a basket of consumer goods and services. So it looks at the price of rent, that looks at the price of clothing, transportation, your cell phone, things that a household will use. And it looks at the price of all these things each year. And it says, well, what was the price year over year? And it looks at the increases and it tracks what was the inflation. How much more expensive were things from year after year? Right now, what is the problem with inflation? Well, the thing is, because of inflation, if we don't spend our money right away in a year, our money is going to be worth less because things are going to be 2% more expensive for our economies. So your money is losing value. It's losing purchasing power. So because of inflation, your money is losing its value with time. It's not going to be able to purchase as much. Let's say you have $10,000 right now. This $10,000, you can buy a bunch of things with it. If you hold this $10,000 and you put it under your mattress and you wait 10, 20 years and you take it out and you want to buy things with this $10,000, it's not going to be able to buy as much things for you because everything is going to be so much more expensive. So because of inflation you want to just keep your money in cash because cash loses purchasing power with time. So you want to just spend it right so you can maximize what you can buy. But that's not smart because you want to save money. You want to grow your wealth. And that's the problem here. Now, because of inflation, cash is actually the worst long-term investment you can have. A lot of people, they say cash is king. And I agree, cash is great in the short run, but in the long run, it loses too much of its value. Now, people don't realize this because it doesn't fluctuate as much. For example, if you're holding cash, yes, it loses 2% of its value each year. But if you're holding stocks while stocks are stuck and drop 50% in a year, just like that, there could be a market crash and you lose 50%. So people see stocks and other financial products as risky because you can lose a lot in a short period of time. But if you look on a long period of time, stocks have always been positive on a long period and it has to be a long enough period of time, and we'll talk about that. But stocks have been positive. But if you look on a long period of time, cash loses value. So if you need money in the next year, in the next period, and the next few years because there's a big expense or something you want to do or you want to go on vacation, then yes, it's great to keep cash because you don't want this volatility. But if you're planning to so you don't hold cash for 20 years, you shouldn't be holding it in cash. I should be holding in an investment that's going to grow in value and not lose purchasing power. So because of inflation, we need to do two things. First of all, we need to save our money in an investment that's going to beat inflation so we make more money from the investment than we lose from inflation. That's just to maintain our purchasing power. And the second thing is we would want to beat it because we want to make more than it. So not only do we want to maintain our purchasing power, but we want to be able to buy more stuff and grow our worth with time. Now, because of inflation, you probably realize that your employer gives you a 2% raise each year because they want you to maintain your purchasing power. And we're going to talk about that later. Prices of rent, the increase about 2% per year. Your landlord can increase in Canada, for example. They can increase your rent by 2%. There are laws that prohibit them from, increasing the rent too much. But legally, they can, the inflation rate. So, You know, if you're working on a job and your boss doesn't give you a 2% raise, gives you less than that, you should go see them and told them, you know, I'm basically becoming poorer by working for you because you're not leaving. Not only are you not increasing my wage by inflation, if you're increasing by less than inflation, then my purchasing power is lower. I'm becoming poorer. So you have to at least grow your income by inflation each year.